Good morning, this is the latest market news. I am Uliang. Asian stock markets fell on Friday as signs of a strength in the US economy increased expectations that the Federal Reserve could start to roll back its stimulus earlier than expected. The initial reading for the US growth in the third quarter came out well above expectations, with gross domestic product rising 2.8%, higher than the 2.5% seen in the second quarter and more than the forecast 2%. Markets reacted negatively to the data as investors fretted that the Federal Reserve could start to roll back its bond buying program earlier than expected. The Nikkei fell 1%, weighed by a yen that strengthened overnight against the dollar, last at 98.14. Australia's ASX 200 dropped 0.4% and South Korea's Kospi lost 0.4%. The prospect of the Fed reducing its stimulus resulted in a series of sell-offs in Asia over the summer, with investors scrutinizing US data for clues over timing over when the central bank might change its course. In the currency market, the Australian dollar fell after quarterly statement on monetary policy from the Reserve Bank of Australia said that a lower exchange rate is needed, which would boost growth sooner than expected. The currency fell to as low as 0.9429 to the US dollar before recovering to 0.9465 as the session progressed. The euro edged slightly lower in Asia, last at 1.3412 to the US dollar, compared with 1.3420, as the single currency continued to weaken after a surprise overnight decision by the European Central Bank to cut interest rates. A busy week of macro news ends with the bank. With central banks' policies driving the market, the US employment report is today's most important data point, but the uncertainties associated with the last month's partial government shutdown could dampen the reaction. US October employment report 13:30 GMT. The release of the report was delayed by 1 week due to the shutdown, and also the numbers will be affected somewhat by the unfortunate political wrangling in the US. Due to the way the employment data is computed, the non-farm job gains should be unaffected by the shutdown, but the unemployment rate is expected to rise a little. The consensus forecast for the payrolls is a gain of 120,000 after a gain of 148,000 in September. It was the latest market news provided by ICO FX. Goodbye.